Oliver, what's the deal? And I asked you that question literally. We had an announcement today that was purportedly about SABMiller making an offer for Heineken, but it seems like the real story might be about InBev and SABMiller.
So yes, lots of deal making going on or potential deal making going on in the beer sector. SABMiller approached Heineken with a very, very preliminary approach. Heineken said absolutely no way, which just makes everyone think, why is SABMiller interested in buying Heineken, which is a smaller competitor? Well, the reason will be to bulk up, because for a long time now there have been rumours that SABMiller itself will be a target for AB InBev, which is the industry leader by a mile. So this could be SABMiller trying to bulk up to defend itself.
And funnily enough, if you looked at the stock prices today, what you saw was SABMiller's price going up more than Heineken's, which suggests that people are reading through to the InBev Heineken deal rather than the InBev SAB deal rather than the SAB Heineken deal.
Absolutely. The SAB Heineken deal looks like it's probably a non-starter. The founding family of Heineken have very clearly said, no, this is not, in their words, this is not actionable, which I think means that they're not interested in the deal.
How much of the company do they own?
Well, they own half of a holding company which itself owns just over half of Heineken. So their economic stake is 26%, but they use this very well. This 26% stake gives them influence to decide exactly what takeover offers should and shouldn't be considered.
And the 74%?
No. No say whatsoever in any of this.
Okay,
clearly.
let me ask you this question then, Oliver. All the companies we're discussing here are already enormous. Why then do they need to do a deal to get more enormous still? What's the underlying logic here?
Well, the underlying logic, like any deal, is cost savings. You could combine two companies, you take out costs, that's one way to find growth. Now, the question is, why do they need to find these cost savings for growth? Well, it's because the overall beer market is not an exciting place to be, particularly in developed markets. Their volumes are going nowhere, and the whole story is all about premiumization, which is their way of trying to convince people to pay more for more or less the same product. That can only go so far. So emerging markets, that's also a growth story, but it's starting from a very small base, and it's not clear that you can make a profit in
And
that.
economically, we are seeing the emerging markets sputter in any case.
We are. So cost savings is what it's all about, which is why these already enormous companies want to become even more enormous.
And just a last question. Are the antitrust authorities going to have a say about all of this?
Yes, they will. In all of these cases, that they would have a lot to say. Perhaps less in the case of ABI and SABMiller than in the case of SABMiller and Heineken. But either way, there'll be a lot of work for the antitrust authorities and, of course, for the antitrust lawyers.
Here's to that.